Hey traders, welcome back to my channel. This is yet another episode of our weekly Forex Forecast. So without wasting any much time here, the first pair on our list now is the euro dollar. For quite some time, we're highlighting the euro dollar to the upside, and I noticed that we came on here and then we just reversed all the way back down. Now, what happened was that the market came right into a very solid supply level, which happens to be the weekly supply level. All right. Now, as things stand here now, we are actually back at this bottom, which is this blue bar right here. And as things stand, the market look very heavy. So I'm actually 80% bearish on this guy. Now, let me show you guys how we can actually go ahead and make money in this coming week. All right. So now, once we get on to the daily time frame, you can see that in the event in the journey of the market moving in the course of the market moving from point A to point B, actually gave us some form of a hint here, which is this particular point right here. All right, so this was more or less a based drop. All right, so as you can see here, this is also a supply level. So now what happened was that prior to this whole thing happening here, we actually highlighted this guy to the upside, thinking that the market was going to come down here to retest and then give us that continuation upper. So what happened? So what actually happened was that around here we're actually thinking that the market was going to pull back and then give us that continuation higher. However, as things stand here, the market actually broke back down below, then gave us some form of a supply level somewhere around here. So what we are now going to do is that we're going to go down to our daily time frame and then mark out this level. All right. So on the daily time frame here, if you look closely, we have a very beautiful supply level that was formed somewhere around here. So what we need to do is just go ahead and highlight that level just like so. So now, how do you highlight this level? You just look at the previous bullish candle before this impulsive drop here, which happens to be this one. So you're going to cover that entire candle and then extend your bar like so. That's exactly how you go ahead to mark out your supply level. All right. So now in this case here, now what we need to do is now wait for the market to pull back into this yellow bar right here and then give us that entry confirmation, because as traders we are actually reactive and not predictive. So we need to see the market actually pull back into this yellow bar right here and then give us that continuation pattern to the downside. All right. So on the 4 hour time frame, this is how things look. It's very simple. All right. Just a decent pullback to this 4 hour, this daily, and then also the 4 hour supply level, or this drop level around here. So once we see that decent pullback here, we can actually continue, to short this guy all the way back down. Now the euro dollar could actually be collapsing further, and then we could even see the 2021-2022 bearish market run again, but that is just aside. All right. So the next pair on my list now. So for the euro, once again, we need to see a pullback into this bar, right, into this level somewhere around here, and then look for a decent bounce entry, and then we actually continue lower. So once the market comes to that level, I'll be here to let you guys know. That's why you have to turn on the bell icon and subscribe to this channel. All right. So the next pair now is a pound sterling. So for the pound sterling here, it also has a very similar setup to that of the euro. So prior to this whole point here, we're actually banking on the pound sterling continue higher, at least into regions of about maybe this particular point here. However, as things stand, the market actually failed to continue higher, and then it actually came to break back down below this level around here. So now what this means is that everything that happened outside of this point here is a fake out. You guys have been with me for a while. You know that after a fake out comes an exponential move in the opposite direction, and in this case here, the pound sterling looks very heavy. All right, this is an engulfing pattern. So as far as the pound sterling is concerned, what we need to do is get out to the daily time frame and then look at how we can mark out this level. All right, so look at how this level looks like on the daily time frame. All right, so just come and mark out this whole cluster of candle here. This is exactly where you want to be waiting for the pound sterling to come into. All right, it's very simple. The market will drop, give you an hint, then continue dropping. All right, and then this also matches very nicely with my Fibonacci, if I'm not mistaken. Yeah, so this is also a very decent level to be looking at for shorting up opportunity, because the market has actually broken out of the upward trend line here. If I draw like so, you can see that this is going to be more or less a breakout retest and then continuation. So this is the breakout here. So what we need to see is a retest and then continuation. So my prime target for the pound sterling remains this blue bar here. However, take out 50% of the position once we get here, because this is my TP1. My first TP will always be the recent blue, and then subsequently we should actually collapse further to the blue bar right here. So I see no reason as to why this should not happen. Now I am only very bearish on this guy, provided that this level actually holds. Provided that after this whole pullback here, this level holds. In the event that we actually break above here, then this whole setup will be invalidated. Which is why I urge you guys once again to go ahead and subscribe to the channel and then turn on the bell icon as well. All right. So for the pound sterling, is very simple. What we need to see is a pullback to this bar right here, and then we can actually go ahead to drop this guy on his head all the way back to this blue bar. All right. So that's so altogether we have about 800 pips on the pound sterling to go. So the next pair on my list now is the is the gold. So gold has actually been pulling back into our POI. And as things stand, gold is actually headed to our POI. So let's just look at how things look on the weekly time frame for gold. So for gold here, gold has been putting series of higher highs and higher lows. In fact, it was almost as if every single week coming that gold was actually going to make a new high, and it kept on doing that. Now the market has actually gotten to a point of equilibrium, in the sense that the market is now starting to pull back. So this is the zone that I'm actually waiting for gold to pull back into, which is right around $2,480 per ounce for gold. So as you can see, that it actually matches perfectly with my Fibonacci tool. All right. So this is exactly where you want to be waiting for gold, at around $2,480 per ounce for gold. Now, once this is said and done, we actually scale down to our daily time frame. The exact same entry confirmation that we saw somewhere around here is the exact same thing that we use. We use a bounce method. All right. So altogether, we have about maybe roughly 500 pips to the upside on gold. So my prime target always remains $3,000 per ounce. But first of all, we need to see the market come back and test this bar right here, test it perfectly, and then give us that bounce method. Once we see that decent confirmation here, we'll actually be very, very confident to go ahead and then long this guy. All right. So peradventure that gold should break below here, which I do not really think that's going to happen, because gold is actually very, very strong. But however, in the event that happens here, we actually have some form of demand level somewhere around here to play with. But I'll leave that for then. So as things stand on gold, I am actually very, very bullish on gold. I'm bullish on gold to the tune of 80%, and I'm very to the tune of 20%, provided that this level holds here. I see no reason as to why gold will not give us money, in this coming week. All right. So the next pair on my list now is the S&P 500. So for the S&P 500, I have actually been calling on S&P to the upside for quite some time right now, and it has been a very, very, very good trade. Like, kid, guys. One thing about the S&P is that once it's trending, it's trending. Do you feel me? So now, long story short here, now we have actually come on here to create another demand level. And so now this is coming for a top pullback and a top bounce into this point here. And then also this pullback is the one that lines up perfectly with the Fibonacci play. So for the S&P 500 here, my prime target remains 6,400 basis points. But first things first, we have to see S&P pull back down into regions of about maybe 580, 5,800, 5,680, basis points. And then once that's said and done, we need to see the exact same thing, entry criteria we saw here in recent time before I actually go ahead to buy this guy further. So my prime target remains 6,400 basis points for the S&P 500. However, once we get to this point here, be sure to take out some of your money, and then move your stop losses to break even and allow the market work for you. All right. So the next pair on my list now is BTC. So BTC has been a very, very solid trade so far. Like, I kid you not, BTC has gone ahead to give us a new high. Matter of fact, we are in for a bull run here as we speak. All right. So for BTC here, it's very, very simple. So we were actually in a range for quite some time, and I've been highlighting these guys to the downside. However, we just came on here and then we broke above this level. All right. So as things stand for BTC here, this is exactly what's happening. So once we create it from this range here to this range here, then extending, you can see that BTC has the potential of breaking even above 100k. All right. But I just like to put the bar at the 100k mark, because that is a rounded figure, and then that is a huge number for BTC, and that is also a level that the institutions should be looking to take their profit as well. So now back down to the daily time frame, this is exactly how things look here. The market has gone ahead to give us an inverse head and shoulders pattern here, and then also broken out of the neckline. So this is the head, shoulder. This is the neckline of this inverse head and shoulders pattern here, and you guys know that after the breakout comes a pullback. Right. So back to the weekly time frame, this is how things look, and as BTC stands here, we need to see a pullback back into the $73,000 per coin, if I'm not mistaken. That's where BTC has to pull back into to actually confirm this whole impulsive drive here. All right. So this is where that demand level lies. So we need to see the market dip back down into this point here, into regions of about maybe $73,000 per coin for BTC. And once that's said and done, we would actually see this guy blow all the way out to even beyond 100k per coin for BTC. All right. So this also lines up perfectly with my Fibonacci tool, which is from swing low to swing high, as you can see, like so. So like I said earlier, what we need to see the market do is just very, very simple. Allow the market come back and test $74,000 per coin region somewhere around here, which is that demand level. Let it test and then give you a decent kind of like this. Then you can go ahead to execute this guy. All right. So that's that for the BTC at this point. Now, guys, if you found value so far, go ahead and subscribe to my channel and then turn on the bell icon as well. All right. So now the next pair on my list now is the DAX index. So the German 30 has also been the one that has given that has made us the most money. I've covered this pair for quite some time to the upside, and if you're just joining me now, you're just you're not too late. All right. So now for the DAX here, it's very very simple. Overall, we are actually very very bullish on German 30. We'll be making series of high highs and high lows. I see no reason as to why this guy should even turn bearish. To be honest, this is a very bullish pair. So now in the course of moving from point A to point B, the market actually gave us some form of a demand level somewhere around here, which is where the market is actually pulling back into. So if you're trading DAX with me, I need you to actually go ahead and mark out the 18,278 basis point on your chart, because the market is actually coming back down there, because this also matches perfectly with my Fibonacci tools. So what we need to see the market do is very very simple. We need to see the market pull back into 18,270 278 basis points for the German 30, and once that is said and done, we are actually headed back to our prime target, which remains 21,008 basis point for the DAX. All right, so like I said earlier, just wait for the market to pull back down into this bar right here and then stabilize. Once it stabilizes, it gives you that entry confirmation. That's when you now make your entry and then put your stop below structure and then allow the market work for you all the way. So we have enough space to 21,000, potentially 21,100 basis point for the German index. I see no reason as to why that should happen, provided that the S&P remains bullish. Then this guy is definitely gonna go bullish as well. The next pair now on my list now is the Nasdaq. Nasdaq also has a very similar structure. Now, mind you, the reason as why I'm very confident in calling out this pair is because the S&P is actually very bullish. So in your case, when you're trading the indices, I'm talking about the US30, the Nasdaq, the German 30. All right, you also want to be mirroring what the S&P is doing, because that is like the XY. Do you feel me? So the S&P is exactly what the XY is to the foreign exchange market. That's what the S&P is to the index market. All right. So long story short here, we need to see the market pull back into regions of about this. So this was the very first demand level that was created here before we actually had that bold move to the upside. So this was the very first demand level that was created here before I actually saw that move to the upside. So now the market is coming back to test it. So what we need to do is to see a very decent bounce like so. Exact same bounce we've been seeing for quite some time here. All right. So let me see if there's a way I can connect my trend lines like so. So we have to make do with the demand level and then also the Fibonacci play, all right? Because the market is actually coming into the 21,000 or rather around the 20,050 basis points for Nasdaq, all right? I see no reason as to why that shouldn't happen. And then once it's said and done, we have space all the way to 22,750 basis points, which is my prime target. And now, if you follow me for a while, you can see that I've been calling Nasdaq for a very very long time. I see no reason as to why we should not rally into 22,750 basis points as far as the Nasdaq is concerned. So long story short here, just wait for the market to pull back. So this is how it looks on the 4-hour time frame, yeah? Because I always like to make my entries on the 4-hour time frame. So it's very, very simple. Just wait for the market to pull back. As you can see, this is a very decent market. You see the S&P, the Nasdaq, the German 30, the gold. These pairs always move in one direction, all right? So what we need to see is the market the market just needs to come back into this zone right here. They give us that decent retest as we've had like this. So once when we see that decent bounce here around that 20,000 basis points for Nasdaq, we would actually go ahead to slap this guy, slap some lot sizes into this guy, go on heavy into this guy, because this is a very solid trade here. My prime target remains 22,800 basis points. But then once we get to this recent high here, we have to take out some of our profit and then allow the market move in a direction as we move stop to past break even. All right. So that's just that for Nasdaq. So prime target remains 22,800 basis points as far as this level holds. So the next pair now on my list is the US30. So US30 also has a very, very lovely setup, very lovely, very, very juicy. In fact, I actually love what US30 is doing. So these are how things look on the higher time frame. So scaling all the way up to the weekly time frame, let's see what has been going on the bigger time frame. So on the big boy time frame here, which happens to be the weekly time frame, the US30 has been very, very bullish. It has been making series of higher highs and higher lows. And let me just go ahead and extend this trend line like so you see that the market is actually coming back to test it. All right. So now in the course of going higher, the market actually came out here to create a demand level at the weekly time frame around the 42,200 basis points. So scaling down to the daily time frame here, you guys know that by now that after the market creates a demand level, it always comes back to test that demand level. All right. So this we had the first pullback after the breakout here. It didn't do much. Second pullback tried. Then this is the top pullback coming in. So and then this top pullback also matches perfectly with my Fibonacci tool. So which is why I really urge you guys to come back and watch this video so that you learn one or two things. All right. So now as far as US30 is concerned, it is actually coming back to into 41,000 and then 41,800 basis points. Once that is said and done, we have space all the way to 47,200 basis points as far as US30 is concerned, because that is my prime target. So you see, we have a lot of money to be made on it, and then the thing about this price is, you see gold, you see US30, you see S&P, you see Nasdaq, you see German 30, you see euro dollar, you see euro pound sterling. These pairs are actually very, very clear and concise and direct, all right, which is why I actually made this episode about those pairs alone, because those pairs are actually clear at the moment and they're going to make you a lot of money in the coming weeks. All right, so these pairs are actually very, very easy to trade, and they have just one direction, bullish. And that brings us to the end of this episode of our weekly Forex forecast. Be sure to click on that subscribe button, turn on the bell icon, and then leave a like and comment. And then I'll see you guys in the next episode. Peace out for now. Bye.